Morning all, how are we all doing? Morning ladder. Just watching these yen pairs at the moment. Just want to see what they do this morning. So I've got out of pound New Zealand this morning. Again, it's the second time I got out of pound New Zealand. I will keep going into this thing and out of this thing. As long as this thing keeps pushing up, I'll keep shorting it. But yeah, I got into Swiss yen this morning. That's the only thing I banked today so far. In hindsight, having taken this trade, obviously the reason I got in was because of the extension on the yens this morning. So we had yen news overnight. We had loads of yen news overnight, but it was the Bank of Japan outlook report, monetary policy, and the press conference. So there was lots of yen news. Basically, been no change in the yield band. They will continue to make large government bond purchases. So the Bank of Japan basically saying they'll continue to buy up government bonds to prop up the currency, basically. The interest rates came out as expected at 0.1, which is negative 0.1, which is what they've been for 4 years or something. I don't know, forever. But basically all the same sort of stuff. But obviously the market reacted negatively to it. So we've had 200% ADRs across the board, apart from Swiss yen. That's just shy of 200, but it's pretty much all 200 ADRs. Pound yen did 225 plus. New Zealand yen has done 225. So massive movements on these. They've all had reversal alerts on M15 as well. So they are all starting to come down. The CAD yen and the US yen are coming down the fastest. Now, I missed those, so I decided to get on the Swiss yen. Any of these you can pick, really. Euro yen, pound yen, they're all the same. But the trade basically is a scalp. One of two things is going to happen. Either this move that we've had during Asia is going to fade back down to either origin or support, or it's going to accumulate and continue the push. You never know which. Sometimes they fade straight away. Sometimes they push and they come back later. So I'm literally just taking a speculative short as we're a massive ADR extension on it. The Swiss yen, looking at it, is the worst possible pick. It's the only one that has sentiment saying to go long because everybody is short the Swissy, aren't they? And stupidly, I've picked the one without checking that looked the best on the chart, but fundamentally it's not the best one to trade. So I've got the Aussie yen open. I've stuck the market reversal alert CA on the Aussie yen, and this will be getting me in short on the next reversal alert on the Aussie yen. So I'm going to take an Aussie yen short. So what I'm going to do, because I don't want to overexpose on the Aussie yen, is if I get into this Aussie yen short, I'm hoping the Swissy will have pulled back a bit and I'll be able to get out of this one and close this one out and swap it over basically to the Aussie, because I much prefer the Aussie yen as a short. So all of those massively extended. Take your pick on those. The only other thing that's hit ADRs this morning is the New Zealand dollar Swiss. So that's had a very good run up to the highs. I'm always a little wary of the New Zealand dollar. It's come straight off of ADR look. So if you were going to take that one, you kind of needed to get in just 15 minutes ago. It may come up and retest, in which case you got a second bite of the cherry. But I'm always a little bit concerned. You always get this stuff happening on the New Zealand dollar at swap. It's such light liquidity at swap. You get a lot of movement. So I'm always cautious about Aussie and New Zealand hits to ADR in the Asian session. This isn't too bad this morning, but look at where we should have been and look at where we opened. If you take that out of the equation, that move there, from where we actually closed yesterday to opening. So this is 5 minutes, don't forget. What they've actually done in that 5 minutes is spread the market by 22 pips. That's nearly half an ADR. ADR on this is 30. They spread it by 22. So if you take that out of the equation, that isn't actually an ADR hit. So you just got to be careful with these ADRs with the New Zealand pairs, and depending on your broker as well. Some brokers will not do this as much as others, and it does vary a lot. So just keep your eyes peeled on that. So there's all your ADRs, all yen based. So I'm going to monitor those and see what happens on those. It's just starting to roll over at the moment, so probably going to get in on that Aussie as well. The other news we've had this morning is the pound. The CPI figures came out as forecast. So we didn't really get a lot of movement off of the pound on that. So pound New Zealand, as I say, I got out. So I basically had a position in profit. So 25 minutes or so before the news, I put an 18 pip trailer on it just to keep the stop fairly tight. Because what I wanted to do is, if we were going to spike back up, get out of the pound New Zealand, because I've got other exposure on the pound short. So obviously that spiked up, didn't hit me. They spread it, took me out, and then they pushed down. So I'm out of that, but it hasn't gone anywhere. So I'm not particularly bothered. That's banked me 0.2% this morning, which is okay. Aussie New Zealand's about to get a reversal alert. We've got 2 minutes left on this candle. So we'll see if we can get this reversal alert, and I'll get in short on that as well. I'm ready to post that. So I'm just posting in the Telegram group. Going to show short Aussie Yen 2 on this M15 reversal alert. May close CHF as not good sentiment direction. Really hard to type, and my microphone is sitting on the desk in front of me, and I'm trying to type around my microphone at the same time. Multitasking. I'm a man. We don't do that. Right. So that's where I am basically. So we'll see what happens with that one. So yeah, these pounds, as I say, pound New Zealand I got out, pound US, as you can see, not really done a lot on the news. So the spike we got was there, not really done anything. Pound yen obviously on its own today. Swissy coming down, very strong Swiss franc. So I'll look at the Swissies in a minute. But yeah, you see, like the pound is actually coming down now at the start of London. Let's check this Swiss franc. So this is potentially strength on the Swissy. Yeah, we got a strong Swiss franc. So this is not the right pair to be on, Swiss yen. Because even if the yen does power up, obviously what I'm anticipating with these is a yen strength during London. Didn't get the reversal on that. Look at that. Less than a pip. Now it's going to put in a massive down candle, and I'm going to get him down here instead of here. We'll see what happens. So yeah, Swissy's strong. So obviously what I'm anticipating is a strong yen to push back on this move. If we get a strong Swiss franc against a strong yen, what we're going to get on the Swiss yen is that, which is obviously not ideal. So I'm looking for a pair that is weak to get in against the yen, and something like the Aussie or the New Zealand would be good because it's their Asian pairs. So, morning JL, morning Diamond, morning Stevie. So we'll see on those. Other things I've got on at the moment is Euro pound long. I've got 2 positions on that one. So this is an RSI hourly extension. I've got one on there, and I've got one on there, or here. Euro Swiss, I've got long. I've got 3 on this. So 2 of these are taken with EA, that one and that one. I took a manual because I wasn't sure that EA was going to get me in. So the manual trade, I'm actually going to get out here. And then obviously, hopefully it will push. Just watching this. What else have I got on? Euro Swiss, Euro pound US dollar. Got that on short at the moment, waiting for some US dollar strength. Again, this is a gap fill play. RSI extension. Looking for a pushback to the gap fill at some point. Don't know when, whenever. Right. that's it for ADRs and the news. So obviously be aware. Oh, sorry, it's not wait for the news. That's it for the news we've had so far. We've got WEF meetings again today. I'm really keen to hear what Lagarde says tomorrow. I'm hoping Lagarde will come out and say something today as well, but we will see. Morning, Shroud. Morning, Freeman. But we'll see. So Lagarde is scheduled to speak tomorrow. So obviously we had that spike yesterday on the euro. Based on that's a beautiful double bottom bounce on Euro New Zealand. Reversal alert. It's just happened. Beautiful W straight off of support. Lovely long. I'm exposed. I'm fully exposed on the euro, so I can't take it. But that's really nice. So yeah, I'm. This is obviously speculation. This move. So I got into this obviously, and it's just tanked because somebody said they were going to increase their interest rates by 0.25% instead of 0.5, potentially. No confirmed source on it, just somebody that's close to the table. So this is all rumor at the moment. We haven't had any confirmation from Lagarde that this is actually going to happen. And until Lagarde does actually say this is going to happen, it's not going to happen. So waiting basically for Lagarde to say something and confirm it. Until then, I think we will fade this move. And that's tomorrow. So what I'm hoping today is that we get a really good, strong ADR push on the euros ahead of Lagarde's speech tomorrow. The only news we've got this afternoon, say only news, is PPIs. So we've got PPI and retail sales for the US this afternoon at 1:30. So that's going to be a fairly big one. Producer price index basically is one of the leading indicators. So it's something we need to be paying attention to. And obviously retail sales is important as well, judging what's going on with the economy. So all good this afternoon will be a strong US dollar. All bad will be a weak US dollar, typically. So something else I'm just going to quickly look at the DAX, just see what that's doing this morning. Just take the color off that. Don't need that. So DAX, I'm playing the 15-minute opening range this morning instead of the 5. Had a bit of a push down ahead of the news. Ahead of the open, but not really done anything pre-market. I'm just watching this Aussie yen as well. Yeah, so we've got those figures coming out this afternoon, so you need to be aware of those. So I'm just reading something that someone's just posted in the group. That's off of Live Squawk. Here we go. So, right, here we go. So this backs up exactly what I just said yesterday and what I've just said this morning. Yeah. This rumor that we had about this 0.25% increase that has tanked the euro, Villeroy has just come out this morning and said Lagarde's 50 basis point guidance is still valid. Yeah, this is why you don't pay attention to rumors. And the first thing, if you were in the live room yesterday when that news came out, I said was, who said that? Because it is so unbelievably important, whether it comes out of Lagarde's mouth or some idiot. And this is an idiot. Idiots move the market just as much as the central bank governors. So Villeroy's coming out and backing up the fact that Lagarde has not said she's going to go 2.5. She says she's going 0.5 in February, and she's never said anything about March being any different. So I expect the euro to spike this morning. So if you want to take any euro longs, probably a good thing to do today. So yeah, that's just come out. So someone's just posted that. Pragmatic regarding rates. The pace of the hikes is probably less important this year, but will stay on course on monetary policy, which is 0.5%. Major increase, terminal interest rates. we reach terminal interest rates by summer. So they're saying they have got a good 6 months worth of increases on interest rates. Yeah, remember they are way behind euro. They're 2.5. The rest of the world is catching, 3.5, 4.25, 4.5. Aussie's lagging, but they're way behind for second largest currency in the world. They are way behind. They need to crack on. So she's confirming that they are going to be looking for a good 6 months worth of interest rate rises there. 0.5% minimum, 0.25%. Yeah. So this stuff that came out yesterday is just utter rubbish. Inflation will peak in the first half of the year. So she's saying inflation hasn't peaked yet. Again, bigger inflation means bigger interest rate rises, which is bullish euro. So this is all bullish euro. So annoying when you get idiots just coming out and saying stuff willy-nilly. But anyway, so yeah, all good for the euro. Which potentially, if that is going to happen, means negative DAX today. So we will see. Nothing's really started yet. We got a massively strong Swiss franc at the moment. So, but as you can see, the pound and the New Zealand and the US and the odd and the CAD all pumping. So the only reason this is not pumping is because the Swiss franc is stronger than the euro at the moment. So when the Swissy has a little bit of a breather, this will pump as well. The yen, euro yen is probably not what you want to be shorting at the moment. And as I said, Swiss yen, I don't really want to be shorting. I've picked the wrong pair this morning, unfortunately. But so there you go. So that's a roundup of the news. So I will look at the RSI extensions. I'm going to spend the morning today. I've got 2 projects. Apart from running all the back tests, which I've got 3 MT4s now running concurrent back tests on the ORBA EA 15 minutes, just to get the optimal, just to basically see what everything does on the 15-minute sets. To be honest, it doesn't seem like there's a massive difference between the 5s and the 15s, but I think the 15s will be a lot less frustrating. So, because the 5s you get a lot more whipsaws on. So we're choosing pretty much the same result, somewhere between a 1 point. Basically, the return on drawdown is somewhere around about 2.5 to 4. So it's all still massively profitable long term. It's just finding something psychologically that's easier to deal with, but I'll get all this stuff all compiled. So my projects this morning are twofold. I want to get all the old COT data up so I can do some analysis on historical COT data. And I'm going to set up a script to basically store retail sentiment. And I'm going to store retail sentiment every 4 hours so that I can get a historical plot of each currency starting from whenever I can get this project finished. But it's going to start plotting historical. Yeah. In the same way as the IG sentiment index does. So, they have this chart, don't they, which plots sentiment, against price. Yeah, so this is people getting short, getting shorter, getting shorter, getting shorter. What's price doing? Going up. And then everybody goes the other way. And you know how sentiment works. But I want to get my own plot basically for this so that I can do some testing, basically, some back testing visually. And the idea being is what I'm looking to do is just pick. It's just a strategy idea that I'm playing with basically at the moment, but it's just picking these strongest and weakest sentiments. So the very strongest and the very weakest of these. So I'm looking for stuff that is like 70% plus in one direction. So New Zealand dollar yen, for example, that sort of thing. Actually, probably 75. So New Zealand dollar US dollar, for example, that one. And basically, just before the London Open, taking a position without a stop So just getting in this case, New Zealand dollar, US dollar long. And then at the end of at the beginning of the New York session, making a decision as to either break even that position or to close that position. So it's basically an in-out strategy. So it's an intraday strategy based on time rather than based on movement or distance. So these are the kind of Larry Williams strategies where he basically gets in on a candle and he gets out on another candle. Yeah. And so basically he will, like a smash bar, for example, he'll get in on a smash bar and then he will get out 3 days later. And it's either a profit or it's a loss. Yeah. So there is no taking profit at this percentage, moving break evens, doing this, that, and the other. It's an in-out strategy. So New Zealand dollar, US dollar at the moment, the sentiment is saying to go long. So the idea being you open up New Zealand dollar, US dollar right now, and you go, let's do it. Buy. Yeah. And I will get out at the end of the session. So US dollar Swiss short. Yeah, get out at the end of the session. I've missed it because I'm late now. But what you would do is you'd do it before the market opens, obviously, because US dollar Swiss is a massive short. Yeah, so that's the idea. I'm just going to do it. Let's do it with these today, shall we? And we'll see what happens. New Zealand dollar CAD long. I'm going to leave the Swiss yen because I'm already I'm going short on that. So see, this is the thing. I'm not sure I want to be doing that. Aussie CAD is a long. And then we got Euro New Zealand and CAD Swiss. Both shorts, weren't they? Yes, it missed this really, but so that's the idea. So basically, if the retail sentiment is correct, what we should see is at some point price moving down. Now it's either going to have really done that movement up or down, obviously depending on the sentiment, but it will have either really done that move during the London session, or the London session will be flat or a little bit sideways, and then it may do it in the New York session. So it's a case of basically you get in before the London session, evaluate when you get to New York Open as to where you are, what you want to do, and then you can take profit or not. And then if you want to, you can leave that sentiment in place and see if New York moves it. Either way, at end of day, you close it. Whether it's a profit or whether it's a loss, you close it. So you're playing the intraday sentiment, and what you're doing is you're hoping that you get in when they are going to move it. But with this sentiment on side, the vast majority of the time, you won't get massive movement against you. You're more likely to get a slight move against you or an accumulation sideways, or it's going to go your way. The best possible ones to take are the ones in line with COT. We've only got one at the moment, which is New Zealand dollar CAD, where we've got COT positioning on our side as well. So it's a strategy that I'm looking at kind of developing, but I need the data. I need historical data, and unfortunately, historical sentiment data is not available anywhere that I know of. But if you do know of anywhere, tell me, DM me, let me know if you find it. So I'm going to have to start plotting this myself because my sentiment updates on an hourly basis. I think an hour is too aggressive. I don't need it on an hourly because I'm literally looking to get in the morning, check it at lunchtime, check it there and get out. So I really only need 4-hour intervals between the checks. I just want to plot it basically so that I can go and do a visual back test on it. So that's my project for this morning. One of the many I've got on my list. So we'll see how those play out. I'm just going to take a quick screen grab of that. Just to save it to my desktop quickly. So I know what it was. Right. So New Zealand dollar CAD has just hit ADR. That's one of the ones I'm. What am I doing on that one? Is that a long? Yeah, you see that this is something else. Obviously, you need to pay attention to. There's no point in taking a long sentiment. I'm buying into the high of the day potentially here, aren't I? So yeah, need to be a little careful. So New Zealand dollar CAD. We know I've been longing this for the last week or so, haven't I? Because the fundamentals on this is a massive buy. Cots on side, sentiments on side. We've got some fundamentals on side as well. So this has been a massive buy for ages. I just get the feeling that might be a little late to be jumping in long, don't you? Anyway, Peter, do you use a 2 moving average? Nope, never used a 2 moving average in my life. 2 moving average is basically price, isn't it? So a 2 candle moving average is, I don't know what the point of that would be. You have to enlighten me on that one. So let's look at the DAX at the moment. So yesterday on the DAX, we basically had another bull day, but it's an outside bar. So we've got an outside bar finally, which is basically indecision and a fight. And potentially this could be the start of the pullback, however long that pullback is going to be. So far this morning, we've just tried to run the highs and haven't managed it pre-market. And at the moment, obviously, we're sitting as an inside bar. So difficult to tell what's going to happen today. If we're going to get a strong push on the euro off the back of that news that came out from Villeroy this morning, we are nearing the phase where monetary easing can be stopped. Oh God. Yeah, if we're going to get that strength on the euro this morning, potentially we could have a down day kick in on the DAX. But we certainly put the brakes on yesterday. So if you look at it on an intraday basis yesterday, all we did was have a nice big push up, didn't manage to get those highs in, and then we just basically came back down towards the end of day in New York. So although it was a bull day, sorry, what I'm doing, this is today, wake up. We had a big push up and a rejection and push back down. So although we did have a little bit of a bull day, it wasn't a big one. So I'll be interested to see what happens today if we get this inside bar. So the DAX 15-minute opening range is in. So I'm taking a break of that 15-minute open. So we'll see where we go. Certainly looking like it's a little bit weak towards the highs at the minute. But we'll see what happens with that. I already got triggered on the 15-minute by 1 pip. Oh, did you get in? Oh, right. Okay. So you're long, are you? Yeah, it missed me. Look. So yeah, missed. It hasn't got me in, but this is the difference when you're back testing strategies. The difference between using a 10 and a 15 pipette spread there is the difference between getting in and getting out and losing $500 or not losing $500. Whether your broker has a 2 pip spread or a 1 pip spread is the difference between getting triggered on orders. It happens a lot. Back testing is to give you an idea of how good a strategy is with specific settings. Never going to get those conditions ever again. So if you don't use the offset, obviously, yeah. And this is the reason I use the offset. This is exactly the reason I use the offset to avoid double tops. So if you get, price double tops and double bottoms a lot, isn't it? double bottom, virtually a double bottom. But you get lots of double top and double bottoms. So what I'm using the offset for is to try and avoid that. So if we get, price pushed down this morning at the open cash balance move was down. They stopped there for whatever reason it may be and pulled back. When we get back down to there, there's going to be a lot of intraday limit orders triggering. So the idea is when you get to that level, there's going to be a load of limit orders, push price back, and you're going to get that double bottom. Now, if that happens to be the point where we start to run out of sellers, what you're going to get is a double bottom. But it may be something like that. And the offset is designed to just stop those instances. So with a candle, when it pushes up, and pulls back like that, if we're going to close wherever we're going to close, if it's going to push up again, right, the people that rejected there, the people that sold at that level, if they are strong enough, they will sell at that level again, which is what causes a double top. This is why we get exact double tops. This is an overrun where we had a strong amount of buyers in there, but the sellers who were triggering their orders here got overrun a little bit, but they're aggressively adding to their positions here, which is why it drove back down again. So that offset just helps with this situation. And this is the reason I put this in the EA as a feature, because I notice visually, I notice this happen all the time. So it's just a case of, look, either you're going to go or you're not. If you're going to go, I'm expecting you to do that. If you're not going to go, I'm giving you a little bit of wiggle room at the highs and the lows. So that's the purpose of that. And again, backtesting with a 15 pipette offset and not gives different results. Not dramatically, because if it's going to go, it's if we're going to get that type of movement this morning, it's irrelevant. But if we're going to get that type of movement this morning, it becomes massively relevant. It's the difference between losing $1,000 on a whipsaw or not. So test it though. Go and test it. Neil, I know I ask often, but this AC trade seems to have liquidated most time frames. I'm short and thinking of calling it a day. Aussie CAD. It depends where you got in. I mean, the entry on this was on H4 there, on hourly. It hasn't really gone anywhere yet. Where are we? So this month. So, so far this month we've moved, whoops. Where are we now? 170 pips. So we've moved 2 ADR. We've only moved 2 ADR in nearly 3 weeks. So you should have maximum sort of 4 positions on it, maybe. Your account should be able to withstand sort of 6 to 10 positions, which is why you spread out half an ADR apart. That's not squeezing or doing anything yet. That's literally doing nothing. It's not gone anywhere yet. That's all you've got. So you've had a double top. It's had no pullback, yeah. So it's not pulled back yet at all. But look at the fundamentals on it. It's range bound. It's not a short. It's not a long. It will do what it likes. From the 29th of November. Blimey. So you're in from there. So you've moved 300. So it's that 4 ADR basically, isn't it? 160. Yeah, about 400, about 4 ADR. So yeah, you'd be in sort of 6 to 8 positions probably there. Yeah, if you're in pain, get out. But I have to say, if you got in on the 29th of November, why are you not out? worst case scenario, on the 29th of November entry, you were break even on it. If you'd have scaled in any shape or form during that, you're out. You should be out of this. You shouldn't be in it. Yeah. Let's plot your trade. Look. 29th of November is there. Okay, so if you got in on that extension, for example, on the 4 hour, half an ADR is 41. So a second position, where are we? So depending on where you got the reversal alerts, you'll be in maybe one there, maybe one roughly there, maybe one roughly there, maybe one at the top. So they're probably, yeah, that's 60 apart. That's 60. So, you know, 1, 2, 3, 4, 5, 6, 5 positions in that. Out. More than out. Out with a lovely profit. Yeah, you should be out. Shouldn't be in it. Unless you got back in. But if you got back in there, you're literally in the same position at the moment, waiting for a pullback. But it's a counter trend trade. I don't know. If you want to get out, I mean, I can't really answer that one because I would have been out then. Well, I was out, but if you're getting uncomfortable, start to scale out. Yeah, but don't scale out the whole thing. Yeah, scale out some of it. So I don't know how many positions you got, however many positions you got on. So take a quarter of that off. Take a quarter of that off. If you're really uncomfortable, maybe take a third of that off, a third of that off, and scale out, take some loss, and your average will jump from wherever it is at the moment, will jump up by half an ADR to an ADR. You're only in 5 positions. You're just in a position though, Neil. That's a position. I'm regularly in 3 to 5 to 6 to 7 positions. This is, yeah, you're trading H4. This could take 3-4 weeks, a month, but you know, like I said, you should have been out here though with a profit, especially before Christmas. You know, I went flat before Christmas, so you kind of missed your exit. If you miss your exit, there's not a lot you can really do. You need to 58% drawdown. Okay, well, I don't know what to say. You're over leveraged. How can you be in 58% drawdown? You should never get to 10. If I'm in a big, horrible, hard, nasty squeeze, I might get into 10% on an individual instrument. Might. It's an EA you're using. I don't know. I can't really. Yeah, 58% is too over leveraged. If I ever get to, you know, go and watch the Boocamp. You've obviously watched the Boocamp. Go and watch the bit of the Boocamp again on drawdown control, which is day 4. You need to. There'll be a comfort level. What are you selling? Some rubbish. Lot sizing, what happens in positions, questions, drawdown. So you need to pick. Right, let me go. This explains it. So what I do, basically, obviously your number one priority is capital preservation. Yeah, can't trade without capital. This bit here is important. My stop loss starts to kick in when my drawdown gets to a certain percentage of my account, and this is going to be different for everybody. Yeah. If my whole portfolio is sitting somewhere between 10 to 15% in drawdown, that's when I'm starting to think, I need to do some drawdown control. I need to do something about this. But you could be looking at 5 to 10%. 58% is a pretty much a blown account. You may well get out of it, not a problem. But if a single pair or position is in drawdown by 1 to 3%, not a problem. If an individual position is getting anything above that, I'm wrong. For some reason, there's something fundamentally changed, and I'm quite wrong on this one. So I'm going to start to scale out or try aggressive drawdown or a combination of both. Yeah. So with this, if I get into 6 pairs, for example, and each of my pairs gets to 3% in drawdown, I'm going to be in 18% drawdown on my account. It's very unlikely 6 pairs are going to squeeze me to that in one go. So 20% is manageable, but 58 is too much. Yeah, I mean, obviously, as long as you know you've kind of gone a little bit too keen there, then you'll learn from it. So yeah, I mean, that upping the risk. So your options here are aggressive drawdown control. The problem with Aussie CAD is where to do it. So this is kind of point of no return and likely where we're headed. But not necessarily, that is very probable. Yeah, look at where we are. We're extended again, waiting for a pullback. So when you get an hourly extension, which you've probably got, I'm going to cover the hourlies in a minute, which you are. When you've got an hourly extension, you're going to get some kind of pullback from it. Yeah. So when we're extended on the hourly, this is when I'm looking, right, I need to do something about this. We've all done it, Stevie says. Yeah, everybody's done it. And this is the important thing. Everybody's done it. Everybody's been through it. Everybody's been burnt by it. Everybody's learned from it. It's just what you do. You hold on to positions. You've got to have a point where you go, no, I'm out. So yesterday, for example, I got out of some euro pound. Yeah, I scaled out euro pound yesterday. Look, I'll come back to this in a sec. But so euro pound yesterday, I closed one out. Here is a loss. Euro Swiss, I've just closed out a loss. Yeah. So this position here is now a 0.59. It was a 0.8 or something. So I've scaled out of a third of that position here because it's gone against me too far. So I'm scaling out. Euro Swiss, I've just scaled out of. Yeah, that was a 0.77. It's not anymore because I've scaled out of some of it because it's pushing too far against me. Now because this is a prop account, I'm having to do drawdown control early. So I'm doing drawdown control when I hit, I think it's 1 ADR. I think that will be a 1 ADR move. That should be something in the region of 63 pips. That's 63 pips. So what I've set my EA to do is when I go 1 ADR against me, take a third off. And what that does is it brings my average right down. Look, I've only got to push up by a tiny half an ADR now, and I'm back to break even. So I'm doing that because this is prop. On a normal account, I would start this process somewhere down here because on my account, I'm happy to take 3 or 4% maybe drawdown on a single instrument. But I will start to scale out of these older ones to bring this average closer to get me out on the next pump, because what we're expecting is if this is going to push hard against me, yeah, we're going to get what? Extended on the RSI. What happens when we get extended on the RSI? We usually get half to an ADR pullback. So right now, you can get in aggressive up here on an M5 reversal alert, or just on price action and say, right, I'm going aggressive now, short, stop above the high with 50% or 30% of my position. So let's say, for example, you've got 1.5 lots on. Yeah. If you're going aggressive, go 0.75 short. And what that will do is it will drag your break even from wherever it is, bang, up to not necessarily an exit, but closer within an ADR. Don't forget, your goal is always to keep your average within an ADR if possible. Now, sometimes you're going to get squeezed and it's not going to be possible to do that. Yeah. So sometimes price is going to move so fast and so hard, you're just not going to get a position on. So you're going to have one there, you're going to have one, two ADR away because it just collapsed so fast. You're never going to be able to keep it within that. But, you know, if you can't keep it within that, aim for 125. If you can't manage that, 150. Because we know when we get extended, when we get a pullback, yeah, from there down to there, from that extension, yeah, we have a pullback of roughly an ADR usually, if not a bit more. So if we can keep our average within that, worst case scenario, we can get out of break even and you're done. But you know, knowing it is a counter trend position. You know, we broke up beginning of November. But I mean, you couldn't really tell this was going to happen then. So just one of those, yeah, just got to deal with it, unfortunately. But it will come down at some point. You know, you're going to get that happen. But you're looking at the inverse, because obviously this is in a downtrend. Obviously the moves down are going to be much better from an RSI high. So if you look at the RSI lows in a downtrend, yeah, there you got a pop there. Yeah, when you got extended here, you got a pop there and a pop there. You got extended there, you got a pop. Extended there, you got a pop. Extended there, you got a very big pullback there, but there you got a pop. There you got a pop. There you got a pop. These pops are our exits. Yeah. So when you got in on the 29th of November, in here somewhere, yeah, that pop was your exit. You didn't get off the train. But there's nothing you can do about it. You're on the train. So you got to wait for the next station to get off. That's unfortunately a waiting game. So there's not a lot you can do about it, unfortunately, in the minute. But, you know, just wait. It will come. It will come. Yeah, they can't continue to push forever. They will have to take profit unless it gets to a fundamental squeeze. But there's absolutely no reason at the moment why this thing should be squeezing in one direction or the other. Yeah, retail sentiment is telling everybody to go long on this. Yeah, so the reason it's pushing at the moment is because retail is short. All retail on Aussie dollar CAD at the moment, 83% of people are short. So the market is just pushing. When this 83% wanes, so when you see this, and this is something you can use as well for drawdown control, when you see this suddenly become 20, 22, 25, 27. So if you watch this on an hourly basis, you see this creeping, what it means is people are just getting stopped out. All these people that are short are getting stopped out. They're getting in short, stopped out, getting in short, stopped out. This is what's happening. They're all short. So the market's pushing up because that's where the liquidity is sitting. So when you see this starting to move back in this direction, that's a sign that there's less people shorting it now. Therefore, there's less liquidity there. So it's less of an interest for the market to go up. So it will probably start to roll over. At that point, you can think, right, I need to really get aggressive on this now, because what you want is for these guys now here to be flipping long. You want this 17 to turn into an 80 and the market's going to collapse. But we can't time that. You have got to literally just sit there and wait. Nothing you can do. So it is a waiting game. I'm short on the DAX. Again, yeah, this is the reason for the offset. Look, limit orders. This is why double bottoms and double tops exist. Yeah, no one ever teaches you about why a double top works and why a double bottom works. A double bottom in this case works because the market pushed down to here and then the buyers stepped in. What is down here at the moment are a load of limit orders waiting to buy that level. Why? Because last time that's what they did. The market repeats what happened last time. It's pumped from here last time. We know there's people that are interested in taking it long from there. Those people, if they're still in the market 2 hours later, which they probably are going to hit the buy button again. Exactly the same principle behind the propulsion gap. The people that pushed hard there to make that move down quickly, probably going to do the same thing again. Why? Because they're short. Why did we push from this area, this level? Because that's where that move started from. Yeah, accumulation, break, push down, add, push down, add, push down, add. There's limit orders sitting here because the guys that started that move are doing the same thing again. So it's the same principle. That's why the offset is there to help with these situations when they occur. Yeah, the difference between that low there and that low there is 1.5 points, 15 pipettes. So on mine, I use 15. But if you want to be super safe, you know, there's no right or wrong. All this is doing is saying, I just don't want to get gathered into the market on a double top bounce, because a double top bounce is, you know, remember 80% of the time the market is range bound, 20% of the time it's trending. 80% of the time it's double topping and double bottoming. It's a very, very common occurrence, but it's never going to happen to the pip, is it? But when it does happen to the pip, all this does is it safeguards me getting in on those. That's all it's doing. It's just helping me get in, not get in on those. But if it's going to spike through, there's nothing I can do about that. You can't, you know, you can keep moving your offset as much as you like, but you're never going to be able to gauge that. It's just a little bit of a safety net, if you like. So, right. Anyway, so let's just see what the FTSE's up to this morning as well. I just want to see if there's divergence. No. So we've got the same movement happening on the FTSE and the DAX at the moment. Again, look, you know, this is it's not rocket science, is it? Pre-market, shorts. Limit order triggers, shorts. Propulsion gap, likely to find buyers. But these aren't going to be potentially limit orders. These will be order executions, and those will be happening probably in that area there, because that is where the propulsion gap broke through. So that was the previous high, which we would expect now to turn into that if the buyers are in control. And again, we don't know who's in control at the moment. Yeah, we've just had the opening cash balance go in. We don't know whether the speculators are shorting or longing at the minute. Right, ADRs are covered. RSI extensions I haven't covered yet. So we'll go through these. So I was just reading a comment in Telegram. Right. So RSI extensions. So at the moment, the 4 hours we've got are euro pound. So euro pound, obviously, as you know, I'm in short. Sorry, long on this one. It's massively extended the 4 hour. It was the reason I got into this one was on the hourly extension. So I got into my first position here. And that was I think that was an ADR. No, it wasn't. No, it's just I just got into it there on the hourly extension, only just extended. And then obviously we had that news yesterday, which, you know, caused a massive drop in the euro, which is the supposed 0.25% rate increase instead of 0.5. So nothing I can do about this one. In it, direction bias I like still, not a problem. So euro pound, it's range bound, but I like it long because I like the pound short and I like the euro long at the moment. But so I'm in that one with 2. Nicely extended on the 4 hour now. So very, very good extension down there. Again, limit orders. That's where we moved from and made a new high. There's a load of limit orders triggered at this low, which has bounced it. They tried again, bounced it. So the sellers aren't able to get through this level at the moment. So that's a nice buy. 5-minute or 15-minute reverse alert both happened this morning. So Asia, you just had the 15 and you had the 5, pretty much the same spot. So that's a good looking long. Euro New Zealand. Again, I've just sold this one based on sentiment, obviously. Yeah, that's a strong sell at the moment. So we are extended to the downside on the 4 hour. Again, euro pound, euro New Zealand. Yeah, both. Again, limit order tree. I can't stress this enough, how this market works. I say the same thing over and over again, but it will sink in and you will start seeing these automatically. Limit orders trigger at that level. Yeah, because that's what happened last time. The banks and institutions repeat. They have levels where they place orders and they move the market from. So, Bob is told to sell the market down to 166,750. He does that. When Bob then goes, I'm at 166,750 with my profit, I need to take the profit off. He has to hit the buy button. When he hits the buy button, he causes a buy frenzy. Everyone jumps on the buy frenzy, and that's what creates that bottom. The next time it gets down to 166,750, Bob will buy it again. It's just the way it works. And so will everybody else. Doesn't work all the time, obviously, but look. Limits. Yeah, it's just the way the market operates. Limits. Triggering. So that's a nice looking potential buy down there. I'm selling it based on sentiment at the moment. And again, the reason being, we know that everybody and their wife is short on this, is long on this thing at the moment, because they've just all bought that double bottom up. When you see that, what's sitting there? Everybody's stop orders. So everybody that's long at the moment, Euro New Zealand, yeah, these 83% of market participants that are long at the moment, they have their stops under there. If the market needs more liquidity, it's going to come down and grab those, and that creates our W pattern. Yeah, bounce, stop run, push. Yeah. So that is potentially what we could well see down here, which is exactly what you see there. Look, stop run, stop run. Now I'm going to go. Yeah, push, drop, stop run, stop run. Yeah. Don't know how many times it's going to happen. It may not happen. It may just go as a double bottom. That's also quite possible, but very nicely extended. So potential good opportunity for a long on that one. Euro New Zealand is a massive sell though. So you are going counter trend. So New Zealand is very, very strong at the moment. Sentiment is obviously against us. Fundamentals are on our side. The only thing we haven't got on side is the commitment of traders positioning. And New Zealand dollar CAD, again, this has been a long for ages. I got into it a couple of times and got out, and now it's gone. So I missed it, unfortunately, missed the move. But it's extended to the upside. I would rather be longing it than shorting it. So hourly RSIs, you've got all the stuff that is on the 4 hours. So, 4 hour extensions come after hourly extensions. Obviously, for something to get extended on the 4 hour, it has to be dropping quite hard. And if it's dropping quite hard, it's usually hit on the hourly first. So Aussie dollar CAD, for example, very nicely extended to the upside on the hourly. It's just pulling back at the moment. Again, these are all silly little fundamental trades that I'm experimenting. I'm live experimenting, basically. So Aussie dollar CAD, yeah, is a nice potential short from there on the hourly. So looking for some kind of pullback, potential push, or just pullback. But hopefully for Neil, obviously, it collapses, and I'm going to take a loss on that, which is fine. I'll take one for the team if it can drop. All the yens, I'm not going to cover all the yens because all the yens are pretty self-explanatory. Aussie yen, I'm in short. CAD yen coming down. So these are all the gap fills that I posted this morning before the market opened, all playing out nicely. My Swiss yen still hasn't managed it though, because we've got a massively strong Swissy. Euro yen coming down nicely. Pound yen coming down nicely. New Zealand yen, US yen. Yeah, so all coming down, doing the gap fills. Again, that's what I pointed out this morning. These are all massively extended in Asia, highly likely just going to come back and return to origin today. So, which is all playing out very well. So any of those that are extended on the hourly, you're either in on them on an RSI extension or you're in on them on an ADR. So I'd ignore all those. Aussie dollar, US dollar, extended to the upside. That's just pulling back very nicely at the moment as well. So the sentiment, positioning on that one on Aussie US is a sell. So it's a very strong sell. Really good opportunity to get in short on that one. You haven't quite got that 5-minute reversal alert yet. So that's a good one to get in short on potentially. What's my exposure? Oh, I've just ruined my exposure. I just realized my exposure is going to be all over the place now, isn't it? Because I'm doing these silly little experimental 0.2s. So if I take all the 0.2s out, I can take the DAX out as well. Aussie dollar exposure. I haven't got any Aussie on. I like that short Aussie US. So I'm short Aussie New Zealand. So Aussie US, obviously, current trend on it is a long. Obviously, and it's just pushing out the highs there. Fundamentally, though, Aussie US is a massive sell. Basically, cop position is full short on it. All the fundamentals are pointing negative. The Aussie is behind the US on pretty much everything at the moment. And we haven't quite got the extension on the 4-hour, but obviously the hourly we have now got the extension. So potentially we're looking for something around about an ADR drop as a minimum on this, where we are now. Trouble is, it's gone. Oh, it's a tricky one, that. I'm going to leave it for the minute because I've got quite a lot of exposure on, I think. But I do like that as a short on the hourly. That's really nicely extended over the 75. Look. Yeah. So looking for decent pullback on that at some point. It's kind of already gone. The reason that's the reason I'm umming and ahhing on the hourly. Look, we're just breaking back down below that level. And it's just really counter trend at the moment, but I just get the feeling this thing's going to come down pretty quick. So Aussie US, I really like that as a short. I'm just going to post that one in the group quickly because just to show anybody that's not on at the moment. Just take a quick screenshot of the fundamentals as well. I like that as a short. Looks good. What we've got next? Yen, Euro odd. So Euro odd, it's already gone. Missed it. You missed it. It's all down there this morning. So that's already moving. Again, the Euro moving nicely. Apart from against the Swiss, because obviously that's the one I'm in. The Euro pound's moving all right. But yeah, Euro odds moving very nicely. Just about to get an hourly reversal alert. Again, up into this propulsion gap somewhere. ADR will be a good spot to take that off today if you got in it. Euro pound. Covered this one already, really, but I'm already in the Euro pound. Again, looking for a move up into that propulsion at the moment, but we'll see how far that one gets. That's all nicely extended. Euro yen, Euro New Zealand. Again, Euro New Zealand looking pretty good on the hourly, massively extended. Move back up into propulsion. Very extended, so looking for a nice big strong push up on that one. Fundamentals on that are a sell though, so you are taking sort of a counter trend if you like with the fundamentals, but 4 hour trend on that at the moment is pretty mixed, so it's very range bound, but erring on the side of sells rather than buys based on New Zealand dollar strength at the moment. So we just come down straight into that double bottom, as we know. So yeah, it's either going to go from there or we're going to get an invalidation and then a push from there, which is what I'm hoping for. But anyway. So yeah, it's Euro New Zealand, pound yen, pound US, and New Zealand CAD. New Zealand CAD we've looked at. That's extended on the 4 hour as well. Pound US dollar I'm already in as a short at the minute, so just waiting for something to kick in on that one. We've got a bit of a strong pound this morning, so but yeah, nicely extended on the hourly there. Again, you know, we're looking for that profit take move to come off of the extension. Just waiting for that move to start. That's 69 pips is ADR. That's 40, so I'm not going to get in a second position on this at the moment. New Zealand's CAD I've covered. New Zealand yen and New Zealand US is the only other one which is extended. So again, nice extension on New Zealand dollar, US dollar, really nicely extended. Okay, so now I've taken all of these sentiment trades. US dollar Swiss is also extended. We'll have a look at that in a sec as well. So now I've taken all of these sentiment trades. Like I said, that one that I took, which was up at ADR, I'd never buy into ADR high. It's ridiculous because it's potentially extended to its move for the day, hasn't it? So when you're looking at these sentiments, rather than taking them willy-nilly like I've just done this morning and just getting in because that sentiment is as it is, the best way to use these obviously is to wait for some kind of pullback before you do this, because what they are doing when they are pulling back, so for example on New Zealand dollar US dollar, if New Zealand dollar US dollar, when you look at it in the morning, has done that, you don't want to get in. If it's done that, you do, because what they are doing with New Zealand dollar US dollar is in taking a profit on the previous stop run, enticing everybody to go short to get their liquidity, and then they're going to run that liquidity. So we need to wait for everybody to be coming down in the direction that the market is. So Euro US dollar, 67% of them are short. So when the market is coming down in these guys' direction, we know a load of them are jumping on and putting their liquidity there. That's when we need to be taking them. So what we need to do, I think, with this sentiment, and again, this is why I'm going to start logging all of this data so I can plot this better intraday. is to take it on the pullbacks. What I've done this morning is just as an experiment to jump in on this sentiment and see where I am at the New York session, is I've taken a buy on an RSI high extension. What an idiot. Not the right thing to do, is it? What I need to be doing is waiting for this to come down here and then in New York, buying it. Yeah, when the RSI is down, because everybody's short. So what everybody's trying to do is pick the top. So when it starts to push down, everyone goes, oh, I've picked the top. And they add into the positions and we get more people going onto those positions. Liquidity goes there. So we need to then buy out of this propulsion gap in line with intraday sentiment. So I think what we need to do, and this is again why I want to get this data plotted, look at it in the morning, good opportunity? No. Look at it in the afternoon at New York Open, good opportunity? Yes. Right, jump on in whichever direction you're going. So, but anyway, CAD Swiss ADR. We'll have a look at US dollar Swiss as well in a sec. So CAD Swiss, we know we got a big, strong move this morning going on with the Swiss franc. So CAD Swiss is working out nicely, but I'm down at ADR now. Look at that. Very rare we get down below 10. That's shot. Massive extension there as well. See if we can find a level. Next level is propulsion. Look. But that's not really a propulsion gap because it didn't break. That's the propulsion gap. And that failed as well, but it did buy out of there, so meh. What's going on with the DAX? So DAX is just flip-flopping around. Again, propulsion gap. Sellers are adding. So we'll see if there's enough sellers to add to that position and push. If not, they're going to get run over. And the other one was US dollar Swiss, wasn't it? So US dollar Swiss massively extended on the RSI. So we've literally gone from last candle not being extended on RSI to now being sitting down at 20s. So yeah, big fall out of bed there. US dollar is not weak today either, look. It's the Swiss franc. The Swiss franc is just on an absolute mission. Undoing all of those moves. Yeah. All those moves. Back down in that propulsion. RSI is hold on top long before what? RSI is hold on top long time before fall on downtrend. Don't see any liquidity indicator. Sorry, I don't understand what you're saying. RSI is hold on top long time before fall on downtrend. No. If you're talking about a specific instrument, let me know. Don't see any liquidity indicator. I don't have a liquidity indicator. Well, I do. This is a liquidity indicator. This shows you where the liquidity is. If you're talking about highs and lows, I don't need a liquidity indicator. This is my liquidity indicator where price turned. There's liquidity there. I know that because it's a high. You don't need an indicator to... I don't need an indicator to tell me there's liquidity there and there's liquidity there. That's just given. There is. I don't need an indicator to tell me where the highs and the lows are. I can see it on the candlesticks. Why would you need an indicator to draw a line there? The last high and the last low have always got liquidity. You don't need an indicator for that. If you do, you're probably on your third day of trading, I guess. I don't know. There's baby steps and there's, my God, you've got to be stupid not to know that. I say no, that's not true. That's not true, is it? It's the wrong word. Stupid. Haven't come across the fact that the market works on liquidity. There you go. That's not. It's not stupid, is it? I didn't know about liquidity at a point in my career, I suppose. But you don't. You certainly don't need an indicator. All these. All these indicators. I see lots of indicators on TradingView that draw support and resistance. Again, liquidity. I say it every day, don't I? People call that liquidity. What it is resistance. Or people call that supply. What it is resistance. People call that a high. It's resistance. Whatever you call it, where price turned, price has a memory. Whether it turns because of A, limit order triggers by institutions, B, limit order runs by institutions, or C, new market participants, institutions entering the market for the first time, is irrelevant. It's a low. The market will react at it. And you don't need an indicator to tell you that. You can see it. Yeah? There's liquidity. There's the reaction. There was liquidity. There's the reaction. There's liquidity there. If ever we get there, however you want to draw it in, there'll be a reaction, either for limit order triggers, liquidity runs, or new participants. Those are the three things that make the market go up and down. There are only three things that make the market go up and down, and it's buying and selling of orders for specific reasons. So you don't need an indicator to tell you that, do you? But the market reversal alerts indicator tells me when we've had a market structure break. Yeah. By its very definition, having a market structure break means there is liquidity or a high in place. And there will be now a load of limit orders sitting there by institutions. So I guess that's my liquidity indicator, if you like. And this is obviously my liquidity indicator because this shows me where the institutions started to move. Makes sense? DAX is not doing anything today. We haven't got an opening range break today. You had an opening range break to the high on the 5 minute, but you got that far. And the low, you got that far. So literally just rotation today, which I'm quite surprised about considering we've got so much movement on the Euro and the Swiss. I would be expecting the DAX to actually be a little bit more volatile today, but it's just not, is it? Unfortunately. Can't really do anything with that one at the moment. So we'll monitor these little 0.2s I've taken, and we'll see what our average is at the end of the session. Actually, this is a really silly way to do it, isn't it? Taking a 0.2, the 0.2's got a completely different value on all of these. So some of these are going to be either more in profit, or what I should have done is used a fixed risk calculator to actually calculate maybe a 1 ADR lot position on it so that I knew that everything was going to move the same. That's what I'll do when I'm testing this properly. But yeah, overall, we're not losing or winning really at the minute on that, are we? But, see here, Neil, if you're still in here, for example, yeah, my Euro Swiss position, I've got 3 trades on it at the moment. I'm actually only sitting in 0.72 drawdown. I mean, less than 1% drawdown on the account with 3 positions on. When I get to 4 and 5 and 6, then I'm starting to get in the realms of, 1.5 to 3% drawdown. That's when I start thinking, right, well, this move is not actually kicking in that I was expecting to kick in. So now I'll start doing something about it. Having 6 positions on should get you somewhere in the region of, if you're really a little bit over leveraged, maybe 5, 6, 7%. 58% is too much. or whatever your drawdown is, So, but yeah. Right. So we'll let these play out. Aussie dollar yen is working nicely at the moment. So the other one that I've got on, which is the Swiss yen, I'm just going to give it a little bit of time. I might actually, I'm going to give it 0.25%. If it pushes 0.25% against me, I'm going to get out of this because I don't want to be in 2 yens short. And the Swissy, in hindsight, when I pressed the button, I didn't check the fundamentals on it, and I should have checked the sentiment. And that's totally the wrong one to have on because that's the strongest thing out there at the moment. So I'll get out of that. I'm hoping the Swissy will weaken, which will obviously give the yen a chance to give this a little bit of a pop as well. And if it does, what I will probably do, in fact, what I'm going to do is at break even, I'm going to stick a trailer on it. I'm going to stick a trailer on it now at 430. So basically, if this pushes down, what I'll do is I'll just trail 0.25% behind it because this one is the real trade that I'm taking on the yen. But if this gets to 0.25% as well, I'm going to bank that. So halfway there. Okay, anybody got anything else they want to look at or discuss? I've covered most pairs this morning because we've either got ADRs or RSI extensions on a lot. So there's lots of opportunities to jump in on stuff today. Apart from the DAX, which is not going anywhere. So if you weren't using an offset on this morning, you've had a long stop out short entry. So you're short at the moment. But we got no direction today. US indices not really doing a lot either. Oil I haven't looked at. So oil. I got out of oil yesterday. I forgot about that. So I broke even on oil yesterday. Here. It is pushed now again. The reason I got out of oil was because I got in a bit high on it. I still like it long, but I got in up too high basically. As we broke out of this level here, yesterday's high, I started getting in long just below yesterday's high. We broke out, and I realized, obviously, again, I was longing towards an RSI high extension. So I wanted to get back in on it. So I put a break even on this one yesterday. It came back, stopped me out, and then it rallied again towards the end of New York. So I've screwed up oil basically. If I was still in it, I'd been nicely in profit at the moment, and I am expecting a continuation push on it. But I'm out at the moment. RSI is very extended on the 4 hour at the moment. So we are very, very, very high. And we are just coming up into, again, not to labor the point, but we're coming up into resistance. So I am expecting to get some kind of reaction and limit order triggering up here, which seems to be happening now. We are hitting a wall. So that's what I want, is a drop to get in long. So I'm hoping we're going to get an extension back down to the lows on RSI. And that's when I'm going to start looking at oil again for potentially another long position. But it doesn't really get down here because obviously the market is very, very bullish on oil at the moment. So I just felt I was late to the market yesterday. So I protected it and obviously got stopped out, which is good. Because if it obviously had gone against me, then I'd be very happy. But, not a lot I could do with that one. So I like oil, but I'm waiting for some kind of pullback. Potentially into here is a good opportunity today. If we can break the Asian lows today and come back down into these areas here, market structure is obviously on the 15-minute time frame is bullish. So it still looks great. I love it. oil for a long. I just couldn't get the entry right yesterday. So, market structure is definitely bullish. So any kind of pullback below, if it obviously it doesn't, as long as it doesn't invalidate that low, literally anywhere in here, take a long stop under there if you're going to use a stop. I'm not an advocate of position trading oil because it's too erratic, but like it as a long. We will see. Right, so that's all I've got for you today. Who have we got advertising this time? The Unbreakable Challenge. What's this all about? 5-day event, 1 million people in America will watch this and tune in live for 5 days. What's he doing? Is he a fitness guru or something? No, money making. Another money making one. I strongly disagree. I don't like making money. Right, I'm going to leave it there, guys. I'll be back at 2:20 for the New York session. Be aware, obviously, of news this afternoon. We got 1:30 retail sales and PPI, so we're going to get some serious movement, hopefully, on the US dollar this afternoon. Really hoping this comes out as positive. We are really due some US dollar strength. So I've got my pound US dollar short on at the moment. That's my only real exposure at the moment on the US dollar from a position perspective. So really could do with some strength on the US this afternoon, but we will see. So be aware of that. Obviously, we'll have a look at what's happened when I come on at 2:20 ahead of New York, and I'll be trading the NASDAQ this afternoon. I'm going to monitor this DAX this morning. I'm short at the moment. If we can get a breakout to the downside, fantastic. If we do break out to the downside on the DAX, you want to be looking, obviously yesterday's low, really. Again, limit order triggers. So yeah, yesterday's low is in that propulsion gap. That's really where I would want to probably get out. You need to be aware of that area as well, which is the low of Asia. That doesn't really exist. So real level is yesterday's low. That's where I'll be aiming for. And that is basically ADR as well. So target today, if we can short, is somewhere around there, which would be very nice. But it's not going anywhere at the moment, so we'll see. All right, have a good morning. I'll be back at 2:20, and if there's anything you need, come in the Telegram group. I will be in there, and yeah, good luck this morning, and I will update you as well on the sentiment trades as well. So I'll give you an update on the sentiment trades later and see how they're going, and we'll have a look at them and see whether or not we should get in or out, or keep them, or do what with them. So sentiment should be the same, so I think I might keep them through New York, but we'll see. Okay, so have a good one. I'll be back 2:20, and I will see you then.